Now let's shift, if you will, to the education part of this conversation. And what I mean by that is I want to share with you two chart patterns, two strategies that we use on this trading desk, and I've used for, I guess, my whole career, that have made me a lot of money. Let's talk about the first one. The first one I want to share with you is what's called the gap and go. The gap and go trade can be a wildly successful trade. And what you're looking at right now is Build-A-Bear, okay? We're using Build-A-Bear as the example. What you're going to see in Build-A-Bear are two gaps that took off. And what I find about these setups, a lot of investors don't want to pay up for the gap. They think two things. Number one, I've already missed it. And number two, that's too dangerous. Okay? And what I want to share with you is it really isn't too dangerous, because the gap and go is giving you a piece of information. Technical analysis and you know is a study of price discovery. It's the war between buyers and sellers. The gap and go occurs because the buyers bring a sophisticated weapon into the battle. It's almost as if the buyers and sellers are fighting, you know, with knives and clubs and get stuck at a price. And then the buyers come in the next day and they drop a bomb on the sellers and it's gone, right? And price discovery is somewhere higher. In the case of Build-A-Bear, it's earnings announcements. They keep coming out with earnings announcements better than the street expects, and the stock skyrockets. So how do you make money on a gap and go? Obviously, not every gap. Not every gap. The gap and go that works is a gap because of a piece of game-changing news off of a base of at least 3 months, but preferably more than 6 months. Okay? So take a look at what I'm saying here. So here's Build-A-Bear making a base back in here. You know, what is this? August through August. This was a year-long base. Gapped out on earnings. Took off. Okay? Here is a 6-month base. Gapped out on, and I didn't get the first trade here on Build-A-Bear. I wasn't even paying attention to Build-A-Bear back then. But it put it on my radar to watch. It blew out on a gap up again. And I said to you guys, ooh, I got to get some Build-A-Bear. Particularly because my daughter Layla loves Build-A-Bear. And this was her stock pick. I was never even looking at Build-A-Bear, but I was asking her about stock. She was asking me about what I did. And I told her, hey, you know, she's 8 years old. And I said, honey, one of the greatest ways to invest is looking around your room of things that you like to play with, things that you like to wear, things that you like to eat. Tell me what they are, and we'll figure out what company makes them. And then we'll go look at the company's technical analysis pattern. Believe me, she's very precocious, so she's paying attention to this conversation. I love her. And I explain earnings announcements and everything. You know, she's listening. She's 8, but she's totally engaged. And so I say to her, you know, what do you got for me? And she says, I love Build-A-Bear. I said, that's a great idea. Let's go look at Build-A-Bear. I hadn't looked at it. I looked at Build-A-Bear. I said, holy smokes, chart looks great. Maybe you're onto something, honey. So I told her we're going to put some money in Build-A-Bear. And if we make a lot of money, we can go to the Build-A-Bear store. She could bring a couple friends and they can just have at it. Absolutely. It's a yes day. I won't say no to anything. Okay. Because investing will make us money that will pay for that fun. And you know, that's the point of investing, right? So she's ecstatic. I mean, she's getting a couple friends lined up and we're going to go. But I digress. Getting back to the gap and go. The gap up here on earnings tells you that the buyers just totally annihilated the sellers and price discovery is higher. And so what you do is you then look for the entry point. Sometimes you buy the gap up day with the stop of the low of the gap up day. I didn't do this here because that candle was a little bit strange. So I waited, it came down, took out the low of the gap up day, and then set up an algo buy trigger right in here. This location right here was where we put the trade on. Okay? And now, boom, explode. Now there's another gap up on earnings. Another gap up on earnings. But that's not the type of gap and go I'm talking about. And you could see it immediately closed the gap. It's because the stock is already up too much. Okay? That's not a 6 to 12 month base that it's breaking out of. That was a continuation gap from the prior gap. Okay? But to go over the gap and go one more time, you're looking for a fundamental idea you like, a base of preferably more than 6 months, but you could do 3. Gap up on either an earnings announcement or another game-changing announcement for the company. And then you either buy the gap up day with a low of the day as the stop, or you wait for a consolidation pattern after that gap, and then you put the trade on. I'll give you one more example. Pure Storage, okay? Pure Storage just gapped out of a huge base. Okay, just gapped. In fact, let's go look at it on the O'Neill chart. This is the weekly chart of Pure Storage. Perfect base gap, and it's probably going to go. Now,